Hi, this is Zak Mir from Master Investor with a look at some Bulletin board hero stocks on Friday, the 17th of April. I'm starting off with advanced oncotherapy, where I was looking at this stock from the point of view of what the longer term chart target might be. We already hit the initial target here, which was 14 pence, described a couple of weeks back. RSI 91, so totally overbought as well, but in the near term. But once the shares cool off a bit, maybe back towards 11.5, which was the initial April resistance, there could be the chance of a new phase to the upside, one that hits 25 pence, which would be the top of this February price channel. There's just a hint of a place to draw a resistance line projection from early February. 25 pence would be the target over the next month or two if the shares maintain their current momentum. But as I said, the 11.5 pence zone is the key level at the moment. Below that, and the shares would have signaled that, at least for the near term, they need to regroup and consolidate. Next up is Condor Gold, where the situation looks encouraging indeed. We've had this bull flag breakout above the 50-day moving average of 58 pence. Initial target now, the 200-day moving average of 77 pence, and after that I think the fun could actually begin here. Probably a target towards £1 really could be on tap here within a rising trend channel from September, and obviously that clearly gives decent upside from current levels. Stop loss in the first instance, initial warning about a pullback back below 67 pence, which was the initial April resistance, and then maybe the 10-day moving average at this stage is enough as an end of day close stop loss for those trying to chase the stock higher, given how much we've already bounced over recent sessions. Next up is a stock which is relatively more obscure, let's say. Densitron Technologies. Had to look at this really because of the recent bear trap rebound from below 4 pence. We've broken above the 200-day moving average at 5.4 pence, and really while we're above that, having broken the initial 2015 resistance, the top of this rising trend channel from last July, to 9.5 pence would be the target over the next 4 to 6 weeks or less. As you can see, the shares have also broken above last August resistance as well, so that is a clear positive there at 6.7 pence. Favourite amongst many private investors, IGas, which obviously let them down in the recent past, as you can see from the share price chart. The fracking group running into a bit of trouble, but very encouraging price action yesterday. On Thursday, the whole of the day's price action above the 50-day moving average of 26.79 pence. That's now the end of day close stop loss, as we look for the shares to build on what was the initial turnaround here. In fact, came from this gap to the upside, and we've bounced off the floor of that gap and really headed higher. 40 pence, 45 pence could be the target here over the next month or so, which would be the top of a December rising trend channel, but obviously enforce the end of day close back below the 50-day line, as this has not exactly been a star performer over recent months. LGO Energy, stock which has been on the back foot of late. Some glimmers of hope here in terms of the latest price action. We're trying to head back towards the 50-day average at 2.72 pence. End of day close above that, and this resistance line up for October would be the trigger signal, or trigger signals for a push towards the 200-day moving average at 3.65 pence. But as we have been on the back foot for so long, definitely worth waiting on a clearance of 2.72 pence before taking the plunge on the upside. Finally, we've got Oilex, personal favourite of mine, just in the sense that was following it last year and it performed rather well. I think the shares went up to 12 pence from I don't know, 5 or 6 pence, or even less than that. Situation now is that we've got what looks to be source of recovery here. This has been in place since October. Unfilled gap to the upside in March. It was really the signal, or the big technical buy signal that the trend was changing. We have and then finding support really above March resistance, 3.22 pence. Very encouraging for April so far. Another gap to the upside yesterday towards 4 pence, and initial target now regarded as being 200-day moving average of 4.73 pence, while we hold above the 20-day moving average at 3 1/3 pence. The target over the next month or two as high as 9 pence, which would be the top of this September price channel. That should come into play when and if we manage to clear this 200-day average at 4.73 pence. That's it from me. More updates at masterinvestor.co.uk.